Here I am. Good morning. It's Thursday, June 17th. I am Kenny Polcari, and this is host of the party morning market commentary. Everything you need to know to get your day started. So where am I today? Well, I'm going to step aside. You're going to take a look. You see that? You see this really tall building right there? Yes, it is. That is the Freedom Tower. I am on the west side of Manhattan on the beautiful Hudson River Park. It is a glorious day in New York. The sun is coming up. It's about 70 degrees right now. It's going to be a perfect day. So the city feels alive. There's plenty of traffic. There's people running along the causeway here. Dogs, cats, people, everything. Bike riders, motorcycle riders, cars, trucks, taxis. Everything you need to know. Everything you need to feel in a city like New York City. So it's all coming back together. So let's talk about what to expect, right? What to expect today from the markets, what happened yesterday, what the Fed came out and said, what they didn't say, and how investors reacted. So hold on 1 minute and enjoy that view. So what do we need to know, right? Here are the things that you need to know that happened yesterday, right? The Fed finally woke up, raising inflation expectations from 2.4 to 3.4% yesterday for 2021. They are now talking about the change, and that has begun, right? The dot plot suggests not one, but two possible rate hikes in 2023. As a result, the dollar rallied, gold and oil fell, the VIX rises, treasury prices fall, sending yields up. And so what are we having for dinner tonight? We're having mahogany chicken, but we're going to get to that at the end. So wake up. Wake up. It's about time. It's about time we understand what's going on. The doves have been replaced by hawks, and they are circling the wagon, right? Everywhere you look, whatever publication you pick up, the headlines are screaming, right? The Fed pencils in earlier rate increases. The Fed moves up its timeline for rate hikes as inflation rises, right? The Fed expects to raise interest rates sooner than you think, are only a sample of some of the headlines that are out there. Now, they sound a little bit disastrous, but they're not really, right? Markets did not overreact, nor did they go into panic mode. But it is about time that someone admitted what we all know, that yesterday we learned that the brain trust at the Fed has now raised their expectations for inflation this year, and as a result, have also changed their view on when rates will begin to rise, all while keeping the current policy in place, which means they're still buying $80 billion worth of treasury debt every month, and they're buying $40 billion of mortgage-backed securities every month to help stabilize both the economy and the housing markets. Now, the economy, I'll still argue that may need some help. I'm not sure the housing market needs any help at all. I mean, have you paid attention to what's going on in the housing market? Does anyone really think the Fed needs to be supporting the housing market at $40 billion worth of mortgage-backed securities every month? Look, that's surely another question for another day, but is one that we will be talking about in the months ahead as this conversation about rising rates and inflation expectations take hold. Look, in his press conference yesterday, Jay Powell did three things, right? He told us that they discussed the issues at the meeting, saying that they talked about talking about inflation and rates, but they haven't really set any formal date to actually begin talking about it, right? But they are talking about it. So they've gone beyond thinking to actually talking about it. In the same breath, they raised their inflation expectations from 2.4 to 3.4%, while assuring us that the current pressures are still transitory. I mean, he's just not going to get off that soapbox. Never mind that this month we saw the largest increase in consumer prices since before the great financial crisis, so 2007 maybe, right? Then he told us that they left the current policy in place, zero rates, and they're going to continue to buy this $120 billion worth of debt every month until we see substantial further progress in its goals. So they're still using that language. And finally, the dot plot. The dot plot graph now suggests not one, but two possible rate increases in 2023. One in mid-2023 and one at the end of 2023, which is far different than keeping rates at zero through 2023, right? So they are making progress. The brain trust has suddenly seen what the rest of us know is happening, right? Inflation is on the rise. Housing affordability continues to decline as prices skyrocket, and zero rates must come to an end in order to help normalize the economy. I'm not even sure what normalize means anymore after, a decade of this. And stocks did exactly what you would expected them to do and exactly what we've been talking about, right? They fell. Now, they didn't fall hard. There wasn't a panic mode. Nobody get upset, but they did fall. And while they churned most of the morning, it was not until he took to the stage that revealed what was going on behind the Iron Curtain, that investors and traders and algos went into sell mode. Buyers pulled back, leaving that void of prices. Sellers became aggressive, and prices fell. Now, like I said, it wasn't a disaster, and stocks didn't close on the lows, right? So they traded lower during the day, but they traded up towards the end of the day, so they closed off their lows. But the tone has changed. Yet by the end of the day, the Dow gave back 265 points, or 0.8%. The S&P lost 23. The Nasdaq fell 33 points, and the Russell lost 5 points, or 0.2%. Again, not a disaster. The 10-year Treasury sold off as well, sending yields up to 1.57%, up from 1.5%. The VIX, which is the fear index, rose by 4% to end the day at 1888. Still not a barn burner, but it does suggest that there is room. There's more to go, right? The dollar rose, posting its strongest single gain in 15 months, sending gold and oil lower. Housing starts and building permits are also a bit weaker, and then the bell rang. Ding, 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 ding. The bell finally rang, the sun set, and day turned to night across America. There wasn't much more to it than that, but you did have many of the talking heads on TV telling us that it's all good, nothing to worry about, right? That rising inflation and rising interest rates suggest a growing, robust economy, and like rising tide, that will lift all boats and not just a few. So it's supposed to be all good, right? I expect to hear more of that today after we've had another 12 or 14 hours to dissect and digest the latest news, right? Expect to hear from the likes of Davey Costin from Goldman Sachs, or Ricky Reeder from BlackRock, or even Mohamed El-Arian from Chief Economic Advisor at Allianz, which is a corporate parent of PIMCO, right? They're all most likely to come out in full support of the latest Fed statement. And so it is what it is, right? They're trying to talk everybody off the ledge. This morning, U.S. futures are a bit lower, right? Not a big deal. At 5:30, the Dow was off by 125 points. The S&Ps were down about 18. The Nasdaq was lower by 82, and the Russell was off by 11. Word out of the Fed, once again, is that future rate projections should be taken with this big grain of salt. Nobody should really read into it, and that Jay Powell still believes that the recent burst in inflation is nothing but temporary. They also reminded us that there's no start date for any of this tapering of the current bond buying program to begin, but they did say it's time to retire that phrase, which only means that now we can begin to look forward to the August Fed meeting, because there isn't a July one. The August Fed meeting, which is in Jackson Hole, it's that big boondoggle that happens every year, to hear what's next. And we probably will most likely, the consensus is that that's when we're going to hear more clarity. Look, there's still this disconnect between what the economic stats are telling us, what the Fed had been telling us. So investors have to decide what their proper risk parameters are, and then price stocks accordingly, right? And that's going to present opportunities for long-term investors as well as short-term. It's going to create volatility and an opportunity for short-term traders, right? So in that sense, everyone's going to get a trophy if you understand what's going to happen and how to set yourself up. European markets are also a bit lower this morning after finally having the opportunity to react to what was said yesterday, right? There's no economic data across that region, so the action's all about interpreting what the Fed said and what it means and what potentially then it means for the ECB. Remember, the ECB is not making a move until the Fed makes a move. Markets there are lower. Markets across the region there are lower by about 0.2 to 0.5%. Oil traded up and then down yesterday, ending the day down 1% at $71.40 a barrel. Oil markets have been laser focused on the reopening trade and soaring demand. Oil traders really expected the Fed to say nothing yesterday and were caught off guard by what he said, and that sent the dollar higher, which then put pressure on commodity complex as a whole, right? So think lumber, copper, oil, gold, silver, even food products, right? As the dollar goes up, those prices should come down as they are priced in dollars. In any case, we're still in the $70 to $80 range for oil, I think, through the summer. But remember, our friends at Goldman Sachs reiterated their call for a $100 barrel of oil by the end of the year. This morning, Bitcoin's trading at 39,000, not a big deal. Ethereum's trading at 2,400, and Dogecoin's gone nowhere, trading at 31 cents. The S&P closed at 42.23 yesterday, after testing as low as 42.02, holding that psychologically important 4,200 level, right? Today's most likely is going to test it again. And while futures are a bit weaker this morning, no one is sounding the alarm bell just yet, right? There's no panic in the street, so don't worry about it. Like I said, it's going to be a parade of all the supporters as they try to talk some investors and traders off the edge, right? Reminding them that nothing is going to happen overnight at all, right? It's taken a long time to get us here. It's going to take us a long time to get us out, right? They're going to assure that everyone's got plenty of time to hear the message, understand the message, and then react to the message based on your own analysis of the data and where you are in terms of the timeline, your life timeline and risk parameters, right? And yesterday I told you I thought that they were going to start to talk about it and make it abundantly clear that nothing's going to happen fast. That's exactly what we saw. Remember, like I said, it's taken more than a decade to get us here, so any pullback is not going to happen in months. It will happen over years, but at some point it has to start to happen. I mean, and we've been talking about that, so it shouldn't really be a surprise to anybody. Look, you know what you can do? You can text the word invest to 21,000 to get my digital business card. Feel free to download it. Send me a text message, send me an email, give me a call. I'm happy to talk about markets. I'm happy to talk about plans. I'm happy to talk about concerns that you may or may not have. You can also find me on Twitter, and my Twitter handle is @KennyPolcari. So what are we having for dinner tonight? We're having mahogany chicken. And mahogany chicken gets its name because of the thick, delicious balsamic vinegar that you use in the final preparation of this dish, right? Which gives it that golden brown mahogany color, and it's really good. Simple to make, takes you about 15 minutes to put it together, and then it's got to roast in the oven, and bang, it's done. So what do you need? You need chicken parts, not the whole chicken. So you need legs and thighs and breasts, right? You need olive oil, garlic. You need a lot of garlic, right? Because I love garlic. You need fresh rosemary, fresh sage, fresh thyme. You need some bay leaves. You need a big white onion. You need olives, either black or Kalamata, whatever you like. You need kosher salt, and you need pepper. And then you need a good quality, thick balsamic vinegar, like I said. So you're going to soak and clean the chicken, pat it dry with paper towels, arrange it in the roasting pan, drizzle it with some olive oil, mix it up, season it with the salt and pepper, mix it up, make sure it's all coated and seasoned properly, right? And then set it aside. Now you're going to peel the garlic, right? You're not going to smash or slice the garlic. You're just going to peel the garlic, and then you're going to place it all around the chicken, right? Under the chicken parts, all around the chicken parts. Make sure more garlic the better. Not a big deal. Add the rosemary, thyme, sage, and bay leaves. Put the herbs all around it. The larger pieces of chicken. You can add in, 1 cup or 2 large onions. Spread it all around the chicken, depending. You can never have enough onions, as far as I'm concerned, because the onions just, they roast in there as well. Now you're going to preheat the oven to 400 degrees. You're going to put the chicken in the middle rack, and you're going to roast it for about 45 minutes. You're going to check the pan every 15 or 20 minutes just to take out any excess liquid, because you don't want it to baste. You want it to roast, right? You're going to save the juice on the side just so you can eat it with your meal if somebody wants a little bit of juice, right? After about 40 minutes or 45 minutes, then you're going to turn the chicken over. You're going to drizzle it with that balsamic vinegar. You're going to add the olives. You're going to turn the heat up to 450 degrees and roast it for about 15 more minutes. When it's done, you're going to take it out. It should be this nice mahogany golden brown. You're going to serve it with a roasted vegetable or roasted potatoes. You could even serve it with an herb-style rice. You should always include a tossed green salad mixed with cucumbers and tomatoes, red onions, because I love red onions. And you can serve that either with an Italian vinaigrette or like I always do, lemon and olive oil, a little bit of salt and pepper and some oregano, because it's a simple salad to make. It's always good, and it goes with anything. In any event, it is a spectacular day here in New York City. You can see there is not a cloud in the sky. Let's hope there's not a cloud over the markets today. In any event, take good care. I will see you tomorrow.